Thank you, Sam, and Heidi. Hello, everyone. Welcome to a brand new week of Trading Buddies. Of course, this is the Monday edition, and it is the last day of October. Glad you can join us. That means, of course, thanks, Gary. Cheers, mate. Talloy. Anybody care? Not me. It just means it's the last day of October to me, and that's all, nothing more. But that is interesting from a trading perspective, of course. And if you're in Sunday Market Update last night, you would have heard Julian speaking about the last day of the month of October, not necessarily the last day of the month, every month. And if you were in that, happy days, you would have had a little bit of a bias for the S&P 500 maybe today. Hasn't triggered. I actually placed the order. I did. I'll share it with you in the not too distant future. All right. Before we do that, let's do exactly what we do every Monday and every Thursday, and that's check out pound versus the US dollar as we look to enter London session. Need a bit of a winner here. Had a couple of losers last week, so it would be good if we could get a winner today. At the moment, it looks very much like we're going long, and I'm okay with that. Test of daily pivot, bounce, new high. That'd be good. Those of you who haven't been in this particular situation before, watching us test this system of trying to find a breakout for the pound versus the US dollar at London Open, and kind of getting there, getting a little bit more information in the bag. What we are seeking to do at the moment is trade the break of the range of Asia session. So that is Tokyo Open to current bar, which is, of course, hourly chart before London Open. So if this closes where it is and not lower than the low that we currently have in place, the range will be the low of this bar, or even if it changes, I'll move it. But at the moment, the low of this bar is at 1.1576 and some change. I round that down to 1.1576. The high of the range is at 1.1613 something or other. I rounded that up to 1.1614. And I found the midpoint, which is 1.1595. As it appears at the moment, we look to be going a little bit lower than that, so that's going to have to change. The low is now 1.1574, so a pip difference, but it looks like it hasn't finished. We'll see. I'll amend that in need when the time comes, which is about a minute and a bit away. So back to the thesis. The thesis being that if price continues to go with the momentum of Asia session, which currently is down, then no harm, no foul. We won't be taken into a trade. However, if momentum shifts into London session, then we will be taken into a trade at the midpoint of the range, with the thesis being that we'll hit the top side of the range at least, which is where we will move our stop loss to entry. The targets is pretty simple. It's 2.5 times the risk. So the risk at the moment being here to here, and 2.5 times that brings us out of there. I've got to take 1 pip off the entry though. Off the stop loss very shortly. So the entry is midpoint. Take profit 1 being stops to entry is the high point, and the stop loss is the low point of the range. Pretty simple formula, but let's see where this candle actually closes. And I'll do a quick calculation as to where our midpoint is. All right, should be getting very, very close to a change of bar and London Open. Right, there we go. So the new low is the low of that bar rounded down. So it is 1.1574 will be the low. So as I said, 2 pips actually from where we were. around about there. That means we can bring that down 1 pip, I believe, if my maths is correct, down to 94. And that will be our entry point. I'll just make that spot on. 1594. Okie dokie. And the high doesn't change. So let's enter that as a trade. Now, again, if you are going to follow this, please do so at absolute minimal risk, because it is at this point very much unproven. I know that those who are in the room every day get sick of me saying that. I can hear your minds go, here he goes again, saying that again. I have to do that, guys, because I don't want to lead you into losing money. A little bit I don't mind, that's okay, but I don't want to break the bank, that's for sure. Entry is 1.1594. It may be that this doesn't prove to be a profitable system overall, in which case we'll try something different. But at the moment, I'm still confident that we're on the right track here. Stop loss is 1.1574. Is that right? Yes, it is. 1.1574. And take profit pips was, or I haven't worked it out yet, have I? 74 to 94, 20 pips. So we've got 40 pips of of range. So 20 times 2.5, we all know what that is. It's 50. So 50 plus 1594 is 1644. But 50 pips, we'll just use 50 pips on this occasion. So that'll be the take profit level. TP1, which, as I said, is simply move stops to entry. TP1 is at 1.1614. 1.1614. Take nothing off the table and move your stops to entry. That's the beauty of the trade manager. Of course, I don't have to do anything else from this point forward. So it's a buy. There's our entry. There's our target. There's our stop loss. All is well. Right now, next question is, when do we cancel the order? If price goes down to here, no. If price goes down to here before the end of day, no, we don't cancel the order. We cancel the order at end of day, because we're looking actually for a breakout. And if it breaks out to the low side, well and good. It just keep going, that's fine. But if this is a false break, then we can still catch the real break, which hopefully is in our favor. Righto, so let's leave that one alone and go to the place I normally visit at the, actually, I better update EuroCAD first. Some of you will be in EuroCAD. EuroCAD, we ended up here. I can't remember the exact circumstances now. Oh, right, yeah, I remember now. We took TP1 at 7 pips, would you believe? And the reason for that is I saw price going in the wrong direction, and I just wanted to get myself a little bit of insurance that I didn't lose the whole shebang. And I think the stop, this was a weekly chart, right? We trade this on a weekly bar, this one here. So the stop loss originally was down here somewhere, and now I've moved it up to here. So it's not quite free trading, but it's very close to free trading. Stop loss, if you haven't followed that, the updates is at 1.3475 from memory. Could be wrong. 1.3471. Okay, that's where the stop loss is at the moment. Would I rather be out of this than in? No, I think, it's a weekly trade and the weekly setup hasn't changed. So, well, I'd prefer stop loss down here, I must say. But like I said, it's almost a free trade. If we can get kick here and take out the highs, that would be in the money. So all good on EuroCAD. Now, today, on the weekly game changer bars, those of you who don't know what a weekly game changer bar is, I will tell you, it is all about a thing called a key reversal. Now, a reversal bar is a reversal bar, but a key reversal bar is something that is a little bit different. It's a little bit nuanced. And that nuance is that it has, in this case, a low, lower than the previous week, bar, whatever, candle, and closed on or near its high. The only one that meets that criteria this week is Euro Yen. Do I want to go long Euro Yen at this point? No. Fundamentally, maybe, but technically, no, I can't go long at that point. And the reason is, and I've got to go back a long way, I must admit, I've got to go back to 2014, but that's a pretty strong level here. You can see what happened. Price went up to that level in 2 shots and then sprung back off it very, very rapidly as we went into a 2-year sell-off. Since then, we've been unable to get above that level. But once we did, there's the break and retest. And now we strongly approach that level and have a little bit of an issue with it at the moment. So can I go long here? Answer no. And for that reason, I will ignore the weekly game changer bar. And to be absolutely frank with you, I've got false breakout. This may well be another false breakout. And for that reason, again, that would cement my position as no long on Euro Yen. That was the only game changer bar for the week. There are 2 game changer plus bars, and they both involve the pound, which is interesting because we do have a funny pound. It took off for the last 3 weeks, but last week, the previous 3 weeks, but last week, week before last, had a pullback, and the next bar, which is last week, failed to take out the high, which to my mind puts a bit of a selling opportunity in place for me on the pound, at least short term. I'm not expecting that we'll go through that level very, very easily. I know I'm looking at a monthly chart. That's not going to help us today, but what it does do to me is say, okay, we've got a game changer bar here on the previous week and an inside bar at that resistance level, suggesting that game changer plus means we go short. I'm on board with that directionally. To trade that bar per se, I'm not really on board with. What I'd much prefer to do, and this will be the theme here with the pound, is wait for a false break of resistance or a break of support and a retest. Haven't got the support level in there at the moment, but the resistance, I'd love to see a false break. And on the smaller time frames, that may even already be in play, as you can see. So pound Aussie is definitely on my watch list, but I think there's a better one, and I guess it's kiss and cousin, pound Kiwi. Pound Kiwi on the weekly chart is exactly the same. It has given us a game changer bar the previous week and an inside bar last week. Now, the reason I like this one a little bit more is because we are at the top of the range. I'll go to my analysis chart on this actually. And you can see that the top of the range has not quite been hit. My range, of course, is these highs, this one, and this one, and these lows, this one, and the one that we shot off there a couple of weeks ago. So what I see at the moment is price at resistance. We've got a trend line in there in place and a trade line bouncing off the top. I'm expecting that head and shoulders will play out. And I'd love to see it play out again as a false break. So price above the line, back underneath it, retest the confluence area, then I'd be short for sure. Got to take profit at the neckline. So get yourself safe in there if it does set up for you. Safe there, and then let everything go through probably to this level and maybe even to the bottom of the range. That with Euro Kiwi is probably my 2 trades of the week. Euro Kiwi last week, you'll recall, we had a game changer bar to the upside. Not sure if that was on the weekly chart. No, it was the opposite on the weekly chart. We had a game changer bar the previous week and really nothing. Oh, sorry, that's right. It was a game changer bar to the downside. I agreed with that 100%, as I said, but impossible for me to take that because of the big bar and the monthly pivot. So what we were looking for was a lower high. But we got a high very, very quickly, and it did become a lower high. Getting into that trade on a daily chart was almost impossible for me, but there were opportunities on the smaller time frames if you were alert to the fact that this was going to go short, which, as I said before, was a very, very strong chance or strong probability. Coming off the top, double top, lower high, that's what we're looking for all the time. We have a break of the monthly pivot, or do we? No, we don't yet. We pierced the monthly pivot, but we couldn't close below it. Today we may not. We'll see. I'm not looking to trade off there, looking to trade once again as a false break of resistance. So what I'd love to see is price, okay, bounce off here again, then come back underneath. Once we get above that level, come back underneath both, give me a confluence retest, then it's a short. Like the double top, like the lower high, like the broadening pattern that we're coming off the top of. And there's a confluence area there horizontally as well. So pound Kiwi, euro Kiwi, both excellent opportunities for me this week. And I think they are the trades of the week, but they've got to set up. I'm just not bouncing off them at the moment. I think the indices are interesting as well. I've actually got some orders in place. And like I said, if you were watching Sunday Market Update yesterday, you would have heard the opinion of Julian suggesting that October trading days 18 through 22 have something like a 90% hit rate of the S&P rallying. That's trading days 18 to 22, not 18th to 22nd. We're in, I think this is trading day number 19 or 20 that we are in. So I'm expecting that big bar on Friday may well be followed through. Look, somebody tells me of the quality of Julian as a trader that there's a 90% chance this is going to happen. I'm going to take that position. I'm not going to take it at big risk, but I have done that. So I've got a long above Friday's candle. I haven't gone too deep with my stop loss. I'm not trading the bar per se. I've come back below the pivots daily and weekly, and I figure if price goes below that, it's going to turn around anyway. So I'm just increasing my reward to risk there. Maybe a little bit bold of me to do so, but if this does take off, then I don't think it's going to stop until we get to a resistance level. So that's my thought process there. So it's a simple trade above the high of Friday's bar, and I've done exactly the same on the Aussie 200, trading above the high of Friday's bar. What else have I got? Not a lot that I want to talk about really at the moment. Ash, how you doing, bud?
Yeah, really good, mate. Really good. Yeah, interesting. I didn't manage to hear the comments yesterday from Jules, and
yeah, interesting session.
Yeah, I might go back and watch it actually. It's obviously sort of I've been looking through the fundamental data this weekend, and I've just put a short in the Nasdaq. Okay. Even though I think that there could be another push to the upside. When I'm kind of looking at this, I'm in fact, let me show you my charts. And,
yeah, please do.
And I'll tell you what I'm looking at, because I kind of agree with you and Jules actually that there could be some further upside, but
I've got to say, if this is a winner, I can't take any credit for you. I'm just passing it on.
Yeah, no worries, mate. Well, it's I think the other thing for me is the let me just see if I can bring up Zoom. Where are you, Zoom? Oh, there it is. I think the other thing for me is that I've just put a little marker in, really. I've gone in at zero risk really at all. I haven't really put anything meaningful on this trade at all, because I'm interested in the short, but I do think that there could be another push to the upside before we go short. But I'm kind of ready to go short with this, because I looked at the economic picture this week, and I thought, geez, this market really is in a lot of trouble. And it's still the question obviously is whether we are at fair value. But my other kind of thing is that one of the reasons that we seem to have had such a decent move to the upside on the markets, and then started to come down was because of the Fed and the way that the Fed have sort of added liquidity into the market. And it just seems like a really strange and empty reason to be buying stocks, because the Fed pivot, not because they're good value, not because the ratios are right, not because earnings are decent for these companies, but because the Fed pivot, or the Fed starts to kind of raise interest rates. The Fed raise interest rates, so the market comes down. The link there is for one, I suppose, a bit binary, but also it just seems like everybody's got high. It seems like a drug, everybody's got high off kind of liquidity into the market, and now they're kind of getting these withdrawal symptoms. But the key aspect is the numbers are getting weaker. We did have some decent GDP from the United States from the last quarter, which was, again, a bit of a surprise. The United States was in a recession, 2 quarters of negative GDP consecutively. Then we kick it back with a +2 GDP from the last quarter, which is astonishing. But the earnings that we've had from many of the companies it's been okay, but it's been a little bit choked. Now, if the earnings have been choked, and they were reporting previously when interest rates were probably closer to the 2.25% mark, and now we're getting a Fed which is potentially going to push to 5, which is double, then that suggests to me that earnings are going to get choked again. And that suggests to me that we should be looking for further downside. China's still in problems. PMIs coming from the United Kingdom and all sorts of places just look terrible. And I'll show you one more metric in a minute, but that would tell me that the NASDAQ still needs to drop, and I still think it needs to drop one more time. And I wonder whether we might see the pre-COVID highs from the NASDAQ. And that brings us down, another kind of 2,000 on the NASDAQ, which is going to be, it looks like a potentially another 15 to 20% to move to the downside. However, on saying that, I think that there's another level which is a little bit higher, which is probably in this area here on the NASDAQ. And because what you just pointed out was the same as I was thinking. I was thinking, actually, we could get one more push. Because where are we right now? Are we in a buy zone or a sell zone? And it's a little bit questionable. I suppose you could say a sell zone because we push down from here. But if you look at this area and maybe this area down here, I think it could well be that we're in a buy zone, and we do need one more push, which is why my position's very, very low and very speculative. Because even though I think we're going down, I wonder whether we're in the wrong zone to go down. So I'm putting in a marker here with the idea that this is the area that I really want. But I don't fancy going long. I don't fancy a long on this market to that level, because really what we're looking for this week is what are the Fed going to do and say? Now, a lot of the central banks have come out and really started to get a dovish hike, a dovish hike in the shape of going 50 basis points or 25 basis points in the state of Australia. In comparison to everybody else. But then the United States is slightly different. As I say, GDP data coming out relatively positively, earnings data, okay, unemployment data still good. That would suggest that the Fed have probably got a little bit more room than many of the other countries to kind of go again. Now, on the flip of that, I was doing some COT analysis.
Actually, before you leave that chart, if you don't mind. If you bring your trend line down, where's that take you into that confluence area of the?
Oh,
the
interesting.
higher?
It takes me. Well, actually, if we bring it, there's a couple here. So if we bring this one in, it takes us, depending on when it reaches that point, it takes us there. But if you come to the dailies, that takes us to where we are.
You're there. Yeah. Okay.
Yeah. So on the short term, if we're sort of like looking at this particular trend here, this lower low and lower high, in accordance to this channel, is still intact, which makes this a valid entry for the downside. As I say, the problem is that this is a buy zone. However, we are through that buy zone. So a buy zone does become a sell zone. So it's a little bit questionable, in my opinion, at this area. The reason I've gone short, as I say, is that the fundamentals just don't tell me that I should be going long at this particular stage. So maybe a Fed pivot. And the thing is, if the Fed come out and say, actually, we're only going to go to 5% by next year, how can the market really see that as positive? It still makes no sense to me that a more dovish rate hike that pushes things up to 5%, which, let's not forget, that means each company needs to make 5% return for its investors before they get to any kind of profit that beats what the interest rate's offering you. Kind of, obviously the banks will pay something different.
Yeah,
but
and if they're using borrowed money, to actually raise their income or to achieve their income, that's further going backwards at the end of the day. Because
right. Well, do you know
what?
They've got to pay
more money.
That leads me quite beautifully to my next to one of the other points that I was going to make here, and that is if we look at this. Look at this. Now, what you're talking about is exactly the issue, in my opinion. Borrowing. Now, this is the United Kingdom. Okay, so I haven't done it for the States right now, but this is the United Kingdom. So this is public sector net borrowing. So what councils and all this sort of the thing to borrow to make up the difference in what they are basically getting in taxes. And this has been pushing higher. So now this is where the interesting thing comes in. If you look at these numbers down here, 19.25 billion, 11 billion, it was actually in so 4.18 billion there, but 22 billion. So where we are now is one of the lower numbers over the last few months. But you go down as well, and we are seeing that this is the second highest number over the course of the year. That we're pushing back up the public sector net borrowing. And I think more significantly, if you go back to where we are in 2010 here, the highest level here is around about the 19.7, the highest level in this whole period of 10 years. The highest level is 19.7. Where we are is 19.25. So we're back to the higher levels when things were calmer. So net borrowing is going up. Net borrowing is going up, interest rates are going up. That tells me that things are breaking. Things are going to get broken and get broken quite badly. So I guess all of the stuff that I'm looking at, it just leads me to, I'm not going to use the word doom. I want to.
It's not a pretty picture.
It's not a pretty picture, let's be gentle. Yeah, let's be gentle. Now, but the thing is, that doesn't mean the market can't rally into this. It doesn't necessarily mean that this is going to break all of a sudden, which is why I'd like to ease in rather than stack in. I think that there are areas all the way up as the market rallies, and I probably won't go long. I probably won't even hedge my position. I might, but we'll see. But if the market goes long again, and maybe it goes long off something significant, okay, I will hedge. But if it's just going long because it's trading day 18 to 22, I probably won't hedge. I'll probably leave it and just accept that's got a higher chance of losing right now. Yeah, for a period of time. Because the other thing that I found quite interesting this weekend is when I started to do analysis on the dollar with the COT report, and this is what I found with the dollar with the COT report. This here is the price line. The white line is the price line here, and this is the net positions on the COT report. Now, what I find quite interesting here is that this point here was the point where the market was the most bullish, when it comes down to net positions on COT data. And the market pushed to this level, and then the COT data actually sort of forerun it as it tends to do. So it forerun it and it ran it down to here. Now, if you look at these rallies here, this is a rally here. Everybody started to worry. Well, in fact, This rally here, buying into this rally. This rally here, initially, the market participants were probably wrong in this area because it was a big rally, and okay, they were kind of long, but then they were going short, and it only stabilized. It didn't collapse, is the key. So then the market starts to rally, so they follow it up again. You know, they start to worry. They follow it up again. Little bit of a dip. They're still buying and thinking, okay, maybe this dip is a bit false. We'll have one more push. It does push. But look what's happened since then. This market has rallied, but the COT data has continuously come down and down and down. So the trend is really lower. Now, that suggests to me that since this area here, there has been no market buying. No market buying, I should say, not market buying, but market buying. No marked buying for the USD. And this price is 108.50. So if we come back to the DXY, this is the DXY. This is on the dailies. This is 108.50. Yep. You look on the weekly, it's this low here. So what that is suggesting is that the dollar may well dip down to at least here. You know, the COT data might actually then start to describe a tanking in position. So from the position we get to there, then we'll look at it again. But right now, what it suggested is that this move has very, very low interest. It's got very little interest in this particular move, which suggests that this is possibly surviving on air. You know, it's on life support at these particular highs. Now we know these areas are lofty, so there is a decent chance that the dollar does dip down to here. Now we don't know when. That's not what the data is telling us. But what it is saying is that this is a genuine target, and it might even be a little bit lower. You know, that the position might be closer to 108. You know, it's a nice round number. I know 108.50 is pretty good, but that's a nice
Not
round
on
number.
my chart. And there is a time factor on that. For me, the time is 7th of November.
7th of November. Interesting, mate, which actually is after the Fed speak.
Yep.
So we got the Fed this week. Now, can they say something that starts to kind of boost things up again? Well, I suspect they probably can. I think the overall picture here is now add to that what happened last week. Inflation data, PCE data came in, flat-ish, but the market was overjoyed. Amazing, you know, it's pretty good. It wasn't that positive, you know, it was still too high. But European CPIs way too high. So we've got this problem really that is unfixable. Now, in comparison, in relation to the charts, what that says, and I go back to the Nasdaq, what that says is that the Nasdaq is still overvalued here because these were the COVID highs. And this market is in all sorts of trouble. We don't have an economic situation to say that we are at the bottom, in my opinion. You know, I think that there's still a recession coming. I still think that, deeper than we've had. I mean, we had a little flash of recession. We've got yields that are inverting. Continue to invert. We've got inflation, which is remaining sticky. We've got Russia getting more aggressive. I don't know if you read the stuff the other day about them stopping grain exports from Ukraine.
Yeah.
So we've got a lot of things just stacking up. We've got public borrowing costs. Okay, only in the UK right now, but we could have a look at the others over time. But public borrowing costs going up. Now that says that things that are, if not broken, that it's going to be very, very difficult to reverse where we are right now, considering the battle that central banks and governments have to face. And that tells me that we should be probably still looking at negative moves in the stock market rather than positive moves, even though the stock market is not the economy, which I get that argument completely. Ultimately, it still filters through to what happens with the stock market because profits have to come from economic activity. So, and the reason it's not the economy in a way is because, companies can do what they want with their pricing points, and cutting things here, there, and everywhere. But obviously, if consumers are buying less, then it doesn't really matter if you cut price. If you raise prices, if you've got less customers,
No.
then it's going
And
to affect your
consumers
profit.
have to buy less at the moment. I mean,
Yeah, they
it's
do,
a
mate.
given. Inflation takes fuel. In winter, you guys are going into winter. The cost of
Yes.
heating is going to be astronomical.
I was told yesterday by a friend that they've got their most recent energy bill and it's gone up by triple. It's tripled in value since the last time. Yeah, and that's we're just hitting the threshold now where the energy thing changes. A lot of people secured their pricing, but now we're going into the next quarter, so we'll start to see what happens. So their price has gone up by triple, and this is a friend. It's not like just
that's insane.
Yeah, we're not talking about data from Forex Factory or something like that. This is a friend of mine, and apparently they said they haven't had the heating on. They had it on once, I think. So they've had no heating, and yet their energy costs have gone up by triple. So this winter is going to be hard. And when you sort of start to know that and hear what people are like feeling on the ground, and you look at the macro picture, because I don't think the macro picture really paints anything else. And okay, this is this country, but eventually what happens in the United States won't be, will cripple everybody else, and the likes of the NASDAQ, those companies sell to other countries, namely China, for one. So so it can't sustain itself just on America, purely on the States. Maybe things like in the Russell can, because they're a bit more domestic. But the international companies will be harmed. So my case is for downside. That's the longer term picture. Now that doesn't disagree with what you're saying about a move to the upside.
Sure.
I'm just very nervous about trading long here.
Interesting that you should say that, because as the general populace becomes as nervous as you are, and they'll probably become even more nervous than you are, guess what happens?
Yeah.
The sentiment of the market just loses all confidence, right?
Yeah.
And once that happens, if it's not happening now, once that happens, then that's the time that you want to be looking for a turnaround, right?
Yes. Yeah, absolutely, mate. I think,
and that's our challenge. Are we there? Where do we go? Where's the bottom? And we're never going to pick it, of course,
absolutely. And maybe picking the COVID highs is a little bit arbitrary, but I think for me, I need to see one more dip before I feel really confident. And the COVID, the pre-COVID high looks to me like a relatively sensible looking area to think about, things going up. Because as I say, valuations are still too high. Valuations were so high at these levels that even down here, they're still elevated. I mean, that is just crazy to think that the market has had this 20% move to the downside, and yet we are still elevated on valuations. And it's because of... And it's back to that same thing. It's because of the Fed. It's because people have been high on liquidity. That they haven't been buying stocks because the profits have been good and the margins have been good. They've been buying stocks because there's been cheap money sloshing around, and it was really the only place that you could get your cash. And I suppose that's the point, is that if the Fed raise interest rates to 5%, so you're going to get a 5% yield off the bond. Why would you go into stocks?
Well, you wouldn't, and that's exactly what will happen. As especially newcomers or part-timers, I suppose, who are in the stock market for maybe the first time, but maybe they've dabbled before, but suddenly they've had all this cash to distribute to wherever they saw fit. And as you say, the stock market seemed like a good idea at the time. As they now start to see, and I know I'm going to get phone calls from people who've got superannuation, and they're going to ask me what to do. And I'm going to say, I've got no idea. But the one thing I can tell you is that this will be a temporary situation, and eventually we'll make a new high. That's the same thing I say. It's just the stock standard answer that I give people when they ring me. And I think that's probably the only idea that I have going forward. But at the end of the day, those people who have entered the stock market in the last, let's say, 2-3 years on the back of COVID and the cash that was made available to them, as soon as they see it starting to go down, 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 they're going to liquidate their positions. There's no question about that, which will bring it straight back down. That, as before, is where you start looking for opportunities, because once all that contagion, I don't even want to call it contagion, but once that sentiment gets to a feverish point, if you like, where, oh my God, the world's coming to an end, blah, 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 we've got to get out. So that's when you want to start looking for buyers. But are we there? Goodness knows.
Well, do you know, mate, I also wonder, we've been so used to the stock market dipping and then rallying again that we've been in a bull market for, a crazy amount of time. I wonder whether the mentality is still really that, and they're just, people are still looking for that to happen. But actually, I wonder whether there's been a paradigm shift and we should actually be looking for, further negativity for another year, really before.
Well, if that's the case, if that's the case, they won't need to get out of the stock market. The stock market will take it away from them.
Yeah.
It's as simple as that.
Now I just talking about so really trading opportunities for people as well. I mean, we're not on a different page, to be fair, because you're still looking for it to break the highs, and if it broke the highs, then my trade probably would be a little bit questionable anyway. But my trade of the week this week was the Kiwi yen off the back of COT fundamentals and seasonals. But if you look at the chart of the Kiwi yen, again, if you look at the weekly, do you really want to be going long on the Kiwi yen up here?
Tough, isn't it? Really
well,
tough.
it is, mate. And this is where the picture really can help you out. All the tools that we have really can help you out, because the COT fundamentals and the seasonals do suggest Kiwi is the strongest and the yen is the weakest. So it would suggest going there. But then you've got to come to the technical chart and it matched that particular opinion. And I don't think it does, because the Kiwi up here looks like it is getting to that overvalued area of the range. So I don't know if I'd want to go long Kiwi here. No, that's looking for this bar to be green this week, which, okay, there's a decent chance that it could be green, and it's probably got a little bit further to go. But I would still sort of be a little bit concerned about going long on the Kiwi yen here. Now that doesn't help people, and that probably makes people a little bit frustrated to think, well, there's no trade then. But so what? It's one of those, isn't it? It's like if there's no trade, there's no trade. Last week we had the Kiwi Swiss. Was it the Kiwi Swiss I said last week?
I believe so.
The Kiwi Swiss.
So I was short Euro Kiwi last week.
Yeah, it was a Kiwi Swiss long. It was a Kiwi. Now look at the difference, but with the two charts here.
Massive.
The Kiwi Swiss long. I mean, this was okay. It's a big one, but it's a buy zone. And when you can see that monthly pivot there, comes down to the monthly pivot, and actually the call was for last week, so it was this whole week here, and you were in a buy zone on the daily chart because it had gone through the sell zone here, back to the buy zone and off. So that was a completely different looking picture than we see with the Kiwi yen. So as I say, you don't have a trade here. Well, so what? If this is too dangerous to kind of get into, and there's probably a trend line along here. Yeah, there is, which we're not currently confirmed to be through because the dailies haven't closed. If there's no trade this week, it's not really a big deal. That there's nothing. Not that there's not a trade this week. Of course, you can just flip strategy. You can go somewhere else and find something. You can go short term. You can go short on the Nasdaq and hold positions if you want to. If you want to sort of do what I'm doing, you can potentially go short on the dollar for the week. Again, because
or you can wait for retracement on that pair and pick it up at a good level.
Or you can wait for a retracement. Absolutely right, because that would be potentially where the monthly pivot currently exists. But it probably will be a little bit. That will probably be gone by the time that comes down there. So absolutely right, mate. There are sort of other options. We got some unemployment data from New Zealand as well this week. But you know, difficult to go long on the yen. I mean, they literally are doing nothing, are they? The BOJ are just putting their head in the sand. They're not interested in trying to fix things up at all.
Is George in the room?
I don't believe he is, mate. No, I don't think he is, and I wonder whether the clocks have fooled him. I know that you had a conversation about, but
hang on, George is in the room.
I am.
Oh, sorry, George.
Oh, George.
I had my video off and just listening to your guys' analysis, so it's been absolutely fantastic.
Oh, sorry about that, George. Sorry, I was keeping going because I didn't think you were in.
No, I mean, I've been watching my charts. I'm not in any setup or waiting for anything. So there's nothing to jump in and kind of let guys for. You know, the last day of the month is always very, very interesting for me. You know, I really want the elusive greater perfection, if that makes sense. You know, I need to be as close to my 100% certainty of things going 60% of my way.
Yeah,
actually, that's a great question. What is your attitude going into the end of the month, George? Is it if you're in front, stay in front? Is it if you're behind, I can maybe correct the balance sheet, or am I watching what the institutional traders are doing, closing positions, or what's your attitude towards end of the month?
If you are in front, restrain yourself and stay in front. That's my kind of motto. If you are behind, it's similar to that. Best not to try and catch up because you could fall even further behind.
Yeah.
So that I'm ultra cautious because I just every time I look at the end of the month, even when it just stands alone like today, or when it coincides with an end of a quarter or something like that, you just don't know when you start to get the big institutions coming in and dramatic things taking place. And you just don't want to be caught out by slippages, and so you really have to be ultra cautious. And I mean, I was listening to what you were saying. I was trying to glean what fractions go in it. But today, if anything sets up, I'm not going beyond 0.25%. You know, you know, any other time 0.25%. If it's in profit, increase to half, 1%, 2%. But this day, I just stay on a 0.25%. Rather make bits and pieces than to try to be the strong man today, if that makes sense.
Yeah, interesting, isn't it? It's that, you know, one of the ways we kind of control the psychology is with the money that we actually allocate. You know, it's not just about not looking at charts and everything else. It's about having sort of like a set of approaches which say, if I control the money this way, actually, it won't affect my emotional ability to kind of sit down again.
Yeah. I mean, it's interesting enough, even, you know, from my view, even if you get these strategies as perfect as you can, if you don't control the money, very easy for, at least for my mind, to forget the strategies and start doing foolish things, you know. So I always reinforce that with the capital allocation. And I mean, it's sometimes, you know, when it all lines up, you know, I've kind of said before, I start off at a quarter, go to half, go to 1, go to 2. I had one of those days last week, you know, and it's beautiful when you get to that. But to get to that, it's not every day. So you don't want to go in every day just being swinging your cowboy guns and all over the place, hoping to shoot everything down, because it may hurt quite a bit. So if you just plod carefully and just be careful with the capital allocation, when it comes like, what do they say, bananas on bunches.
Yeah, that's really interesting, mate. So you have an approach where you go in at a quarter on the first trade of the month. Is that what you mean?
No. It's always on the day and on a chart, if that makes sense. So today, if something sets up on the UK 100, the first trade is a 0.25%. And if let's say we get into a trend and it's moving my direction, if I'm at plus or minus 1 to 1 on that 0.25%, and something sets up, I'm in at 0.5%. The next trade. And then the next trade on that is 1%, and next trade on that is 2%. And I've got into 3 before. I'd love to keep going, but sometimes then there's a reverse and you gotta get out. But each one is structured correctly, so each one it's got its stop at the correct technical level. So by the time I take the let's say the 1%, I've already banked the quarters. That's probably 1.5. The half is on its half, so I'm on 0.75. So if I get stopped out on the 1%, and my stops are at that level, I'm only down still a quarter for the day on that particular chart. So I do that on each chart. When I've banked money on UK 100, I don't use that money to go and start at 1% on S&P 500. That starts on quarter as well.
Interesting. Yeah.
Yeah,
So
standalone trade. Yeah.
Yeah, that's
so
what
really
on the day. Yeah.
What you're saying is if the particular market is hot, that particular market's hot, then you can sort of use that market, the one that's hot, to kind of go and expand. Yeah, that's really interesting.
Yeah. And then when the day is gone, everything is zero rated. So I don't come in back the next day and say, hey, I banked 3%. Now I'm going to start on 3% today. I start again on 0.25%.
Right.
And just
interesting, mate.
Like
so actually, you're scaling in with what you're doing. You're scaling in.
Yes. Yeah.
And when you do that, George, are you scaling in just because you've hit a target, or do you need a second setup and a third setup?
No, it's all on setups. It's all on setups. Yeah. If the setup is not there, I'm happy to just sit and see it play around 0.25 up and down and settle. But when it's set, so it's based on the strategies. As the strategy is set up, then we in. It's got nothing to do with what's banked.
Do you know, that's really interesting, mate. And do you know what's interesting is that if you look at are most of your trades closed by the end of the day?
95%, I close them.
Yeah.
Very rarely do I hold on to it, and I really got to agonize and make sure the stop is wide. Say, okay, looks like it might just go my way, and I'm trying to take advantage of an acceleration at the open. Then I leave it open, but most trades are closed. 95% are closed. And if I'm holding over for the day, let's say I've scaled in and built up 3 or 4 positions, only 1 position is left open, not all of them.
Right. And the reason I was going to ask that, I'm just going to bring up something on here if I can.
Hello, Philip. By the way, Philip said hello on YouTube, and I haven't answered him. So, g'day, mate. Glad you could join us. Thanks for being our trading buddy for the day.
Right. So, if we look at the FTSE as an example, and let me share my screen. Where are you? This one. Let's make sure it's the
George,
right
I didn't really expect you to turn up in a Jason mask today, but do you? Does anybody over there celebrate Halloween? For goodness sake.
Well, no, they do. It's a very what shall we call it? Small culture, if I can put it that way. But yeah, they do. You can hear the kids going around. Some schools do, some schools don't. It's not a big thing, but it is there.
Yeah, it's become big here.
So I'm not celebrating Halloween, eh?
I can't see what you've got on.
Oh no, this is it looks like Halloween, but it's my Harley Davidson sweater.
Okay.
Oh yeah, it looks like skeleton arm.
Yes, yeah. But that's from Harley Davidson.
Right, I
knew there was
looking at this.
There was a connection there somewhere.
So if you look at this here, now this is the FTSE 100, and what I'm looking at here is down the side here, the percent change from day to day. Okay. So you can see 0.8, 337, 25, 61, 0.1, 6437. Now looking down here, okay, there's one that's near 1%. There's 2. There's 3. So we get, and there's a big one there. So 3 days out of around about 20 trading days. So we're looking at only a seventh of the trading days where we get to near or beyond 1%. Now, when you look at that, George, when you look at your sort of your moves of the day, is it these days that we're talking about? You know, these are the days where you're going to make the money.
Not necessarily, Ash.
Okay.
Even in the days that so in your overall day where you've got, like, let's say 0.27% just at the top there.
Yeah.
When you go down to the 5-minute chart, within that particular day, easily, let's say it's a reversal day, so it goes short in the morning, and then US Open reverses and we're going long. The day is done, it's a 0.27% change. I've had enough moves within there to bank 2-3%.
So you would be trading the swing.
I'll trade the swing. So if it happens in my time frame that I'm working, I will start off and sell it all the way that I can.
Yeah.
And when I see that trend reversal setting up, and get out, and I know I've already banked 0.5%, and it starts to go long, then I'm gonna carry on now at 1% on that chart.
Right, now that is interesting, mate. So actually, you're not scaling into a trending position, you're scaling into your profits, to your profits.
That's correct. It's into my profits. So it's only the same if I'm scaling into both if it's a continuous bear trend for the day. But where it reverses, then I'm scaling into profits. I've banked this much. I'm going to keep going and just keep going on that. So if it then gets to another reversal and starts to sell off again, and I've already banked 1.5%, I'm going to start at 2% and just keep going with it and see how far.
Gotcha. So actually, you could be adding sort of like, the higher percentage position of your account on a counter position than you were previously in.
Yes.
Yeah.
Yes.
That's interesting, and that works. That works more often than not. Would you say?
It works. It works consistently.
Right.
It works consistently. The only time where, if you are in, like on the UK 100, if you look at the past few days, all those dodgy days as they appear at the end of the day, I mean, those are very difficult days to trade. It's going up, you're not even getting sufficient setups at the bottom of the trading ranges to jump into the market. So you might just end up, hanging around on your 0.25% as the day goes, or even on that chart, end up with the minus 0.25. At some point, just say, listen, minus a quarter done. I'm not going to bother with this market because I'm being forced to scalp. I'm in, changes, I'm out, I'm in, I'm out. That's not going to build the profits the way that I want to. So I'd rather leave that and work on a chart that's giving me an opportunity to build my profit, even if it's not a trending day, if it's a trading range day. That's how I work. Yeah.
That's really interesting, mate. Really interesting. And I, because I always think the sort of like the money management aspect of what people do is probably more the key to their success than anything else, than 100%. Even setups, than how you read the market, how you manage the money, how you approach the market with putting, allocating capital. I think it's probably got more sway on how successful you are than anything, because actually, multiple setups work. So what's to say what's the best setup? It's very difficult to say. You can say it's the best setup because if you were to tell people in a crowd, I make I don't know, whatever, 10% a month, and this is my setup, they'd be like, that's amazing. And somebody else could be sort of like, making 3% a month, but have a better setup. But because your money management is more in tune, actually that's where the 10% comes from, not from the better setups.
It's exactly that, because combined with that is this issue of probability. I mean, what's good? I'm comfortable to say my best setup is only 60% probable to go my way. So 40% of the time, I am going to lose money. So if I know I'm going to lose money, the only way I'm going to consistently make good money is then manage the capital. Because if I don't manage it, that 40% can really just dig big holes into my account.
Yes.
So that's why. So when I'm taking the trade, I'm very clear that even if it's set up the way that it should work my way, 60 out of 100 times, I just don't know with this particular trade what's going to happen. So I can't say, wow, fantastic, put 1%. I got to put in my 1/4%. I mean, it happened the other day, on the Wednesday, the market, as perfect as it comes, set it up, take it. By the time, you look up, boom, big reversal. And you stopped out, at 1/4%, you're fine. It's just like, well, that's it. You stay with it. Lo and behold, few other setups later, you end up the day on 2 or 3%. But if you didn't do that on that first one that you get stopped out and you're down 1%, by the time you get your whole psychology sorted out, market is moved, and you're chasing the market, then it just becomes a mess. And this, how do you end up on saying I'll go 1/4, half? It's just the experience of having been burned and say, but the strategy is fine. But to realize, no, it's actually not just a strategy. It's the management of cash, of the capital. You've got to get both in balance. If you get that, then trading is beautiful. It really is.
Oh, mate, I think that's so cool. I really do. You're going to Bali, aren't you, George?
I'm going to Bali. I'll be there.
I think you may well find me sleeping on your hotel bedroom, just in case I've got questions. Oh, another thing, George. Wake up, George.
The only risk with that is that you're going to have to sleep in the coffee shop, because I can see my wife kicking us out and say, "You guys, it's time for you guys to go and just go sit in the coffee shop and talk trading all day."
Yeah. Oh, it's brilliant, mate. And every time I mention Bali,
George.
Jeff, it always saddens me when I mention Bali to know you're not going. It's horrible for me, I have to say.
Where do you think I feel?
Oh, hideous. Yeah, sweet. Well, you've got to take advantage when you can. All right, that's what Bali's about. But yeah, I think that's really cool stuff, mate. I think that's really, really interesting. And I don't know whether is this something that when you talk about your approach when you do your Wednesday sessions, is this something that comes into play?
It comes into play, and I do talk about it. But I keep thinking maybe I should probably overemphasize it. Just, it's more for guys to get the sense that capital allocation is absolutely key. I mean, you were talking about these top companies on the NASDAQ, S&P 500. They've got the business operations, right? And the business operations, those operating divisions have to churn out the products, make money, etc. But if that whole business is going to work, the smart guys in the finance department have to worry about how do we get capital, how do we allocate it to the different operating divisions so that we can optimize our returns. It's exactly the same thing for a trader. There's no difference. The trades we're taking, that's the operating division. We've got to make sure, when we say, in my mind, when I think and I say out of 100 trades, 60 are profitable and 40 are losing. It's a simple profit and loss statement, right? You need cost of sales. So 100 is the sales, 60 is the gross profit, 40 is the cost of sales. So if I can make that work, good, but I still need my finance guys, this other part of the brain, to provide the capital and to allocate it and say, listen, buddy, you need to give us this kind of return. So for a trader, it's this whole business all in one. But you have to pay attention to that. And that's how we're going to make it sustainable and really make money out of it. So I throw it out, but I probably need to just keep talking a lot more about it. So it really becomes something guys can decide how to tailor make it to themselves, but to know that it's not just the operations of the business, it's the capital side of it as well that come together.
Yeah.
Most people don't even think about that. It's true. It's very true that people want to, they want to know how to make the money, but they don't know how to manage it. It's such an important part of it. And it's all about, okay, show me the winner, Where do I get into the market? How do I find the entries? It's so just a part of it. And you need to have those skills. And I, to be frank, it's the worst part of me as a trader. I'm hopeless. I know how to manage risk, but to manage trades and that money, it's really is a shortcoming of me. And I must work on it very, very hard. And I do work on it hard at times. Then I go and do some bamboo or cut some plants or something. But yeah, everyone needs to work on it.
Yeah, I agree with you, mate. And you know what? As I always say, I mean, the amount of money I've left on the table this year is criminal, really. And it's just, fortunately, I've got a system which allows for that to happen still. But actually, this is still what we all need to recognise, that it's a process. It's the process that's important, not the balance sheet. You might have a healthy balance sheet, but if your process is all wrong, then actually, I really like what you just said there, George, that trading is a beautiful thing. And that's when it's a beautiful thing, when things are just, a kind of zen. You're doing the process. You're not worrying about the cash. Trading shouldn't really be, it's kind of not about money. It's and this is why Warren Buffett has made so much of it, because when everybody was reading Batman comics, he was reading balance sheets because he loved doing it. That's what was interesting to him. Not because it was about cash. I don't believe. I think he just kind of got a lot of joy out of understanding the mechanics of something. So yeah, I think you're absolutely right, Jeff. But this is what Trading Buddies, again, this is one of the things that this is about, isn't it? Is that we can remind each other that actually that there's more to this thing, and let's get back to it and recalibrate, and don't do what you were talking about, George, which sometimes you get to a point where you've over leveraged your account and you almost forget your own system. You almost forget what you were doing, and it is checks and balances, and that I guess that's one of the hopes about this kind of meetup for us and everybody in the room and anybody on YouTube, is that we can keep each other in checks and balances, and not just talk about trade setups. You can go on YouTube and find people that are telling you, you can make all this money from this amazing setup, and I suppose one of the things that we can do is say, actually it's about more than that, because we go through it. We're traders, we're traders, and we're trading, and we go through that stuff, and we're ironing each other out, and hopefully that's sort of spreading a bit to everybody else as well, so we can all kind of gain from this. And I'd encourage anybody to come on and talk about any of their misgivings or their successes on this stuff as well, if you feel comfortable, because really this is about sharing.
Don't tell me you haven't got any misgivings. You must have misgivings.
Oh yeah, we've all got those.
Yeah, look, George,
yes,
you got anything to look at this week, or
I'm really
not really.
I'm just
not
I'm
compulsory,
I'm gonna wait for the month today to close.
Yep.
And probably by end of tomorrow, Wednesday, I'll start to look at it actively. It's I'm not pressed to jump in. I mean, I'm still in the market, still looking, because sometimes you get these crystal clear setups, the ones that you gotta just teach your kids about. And if that comes, then I'll trade it. But I'm not actively hanging out looking for anything yet. Time to do admin as well. I gotta clean out storage and all sorts of things.
I mean, that's good, mate. I think that's good. Well, I mean, I'm ready to wrap, mate. Have you got anything else you want to look at, Jeff, before we close it up?
Not really. Just to reiterate what I've already said, really. Let me have a look at the euro quickly and see if we've still got an edge. We don't. Daily pivot's been tested and retested, so we're not interested in that. The dollar seems to be on a bit in favour at the moment. I don't know that can continue too long, but I think, like we've spoken about before, I don't think it's a super good day for entering the market, to be fair.
Yeah, I agree.
I've got my positions on the daily chart, and I'm happy to keep those both on the S&P 500 and the Aussie 200. And the Euro CAD, if the Euro can rally, happy days against the CAD. If it can't, we're not going to do too much damage on that either. That's a weekly chart. But keep your eye on Pound Kiwi and Euro Kiwi. I think they're between them. That's the trade of the week for me, but no setup yet on either. I want to trade a false break of resistance on both.
Cool, mate. Incidentally, COT data shows the euro is very, very strong this week, but again, the fundamentals don't match it. So, just for my kind of confusing 2 cents.
Yeah, technically, I've got a sell, but like I said, there's no setup yet. And if it goes long, it goes long. No big deal.
Yeah. Okay, mate. Well, thank you as always for being my trading buddy. Thank you as well to you, George, for being our trading buddy. Brilliant stuff as always, mate. And thank you to the guys in the room and on YouTube. We hope you enjoyed it. And if you ever want to kind of come on, the door is always open. That's really what this is. This is more about than just looking at charts and how they work on a screen. Even though that's probably the majority of the stuff. We will see you Thursday, right? We'll be back again to do it all again. George, you got something Wednesday, as always?
Yes, the usual live trading profits, 6:30 p.m. sync for 45 minutes.
Fantastic, mate. Okay,
awesome.
We'll see you, George, Wednesday, and Jeff and I will be back on Thursday.
You bet. Pound Aussie. Forgot to mention that if the Aussie interest rate announcement yesterday favours the Aussie dollar, then Pound Aussie is also a short for mine. Then you've got, of course, the Bank of England on Thursday, Fed on Wednesday overnight. Could be an interesting end to the week. We shall see. I'd love to be free trading when just before all of those announcements. That'd be pretty cool. Have a great week, everyone. Thanks for being our trading buddies. Bye-bye for now. See ya.